Thursday, October 17th, 2019, Maneco 64, home of alternative economics and contrarian views. So there's a lot going on as it pertains to Brexit, a lot of uncertainty. This morning, I've seen the headlines. FT says DUP rejects Boris Johnson's latest Brexit plan. DUP is the Northern Ireland party that has helped the Conservatives in the last few years have a majority. Northern Ireland, of course, is a very important part of the Brexit deal. So, yes, it's coming down to the wire. And why is that? Even though the deadline is October 31st. Well, because there's a EU, how can I say, conference or summit starting today. And they're supposed to rubber stamp the deal today and tomorrow. And then the UK Parliament would have to approve the deal on Saturday. So we'll have to see. But one thing I like to say, in spite of all the volatility in the markets, especially British pound and the price in gold, nothing is changed in terms of currency debasement. And what is currency debasement? Well, that's the only way governments and central banks know how to make the debt more, how can I say, sustainable. It's an easy way for governments to basically default, not legally, but through the back door. It's a stealth default. It's been done for forever, even back to Roman times. When governments get into too much debt, they default or debase the currency. The Romans used to do it by taking the silver out of the coins. And now it's done by creating more and more debt out of thin air, as they're doing through QE. And why do they do that? Why not taking silver out of coins? Well, because we are on a debt-based system, paper system. And money today, or currency that we use, the other side of it is debt. So the only way to keep it going is to create even more and more debt. And that's the whole problem. You get more debt, you have to create more debt. The more debt you have, the more money you have. A simple law of supply and demand. And usually governments, at least in times of war, they do get the debt up quite a bit, and the public accepts it because it's war, right? That's the last time it happened in the UK during World War II. But in peacetime, it's never been done. So as you can see here, the national debt in the UK is almost at 100% of GDP. In dollars, it's almost 3.6 trillion. I think it was around 600 or 500 billion pounds just before the great financial crisis of 08. So you can see that it's the weakness of the pound recently in the last few years has got very little to do with Brexit. Brexit might have changed the way the pound has moved down or up once in a while, but I just show you a chart here going back to the great financial crisis. Well, that's right pretty much in the middle of the chart here. You can see that high at 2007. The pound bought as much as $2.11, and you can see that once the financial crisis was in full throttle, so to speak, the pound crashed to 135. And we've seen lower lows and lower highs ever since. And what we're seeing the last week with the pound rising from around 122 to almost 129 yesterday, in my opinion, is just noise. It's just speculators out there punting on Brexit. But in the long term, as this book here, The Triumph of Gold by Dr. Franz Pick says in the introduction, it says here, and it's the introduction about pick, right? This is what it says. To defeat my skepticisms, he repeatedly cited his two somewhat diverse educational inputs. His hometown rabbi, whose Talmudic teachings proved, for Pick, that every currency was doomed to be unstable. And second, the 19th century Prussian economist Georg Friedrich Knapp, who believed that money, and I think in this case he means currency, right? Because money, you can have money without the state, I would argue. Money was an instrument of state order. And it definitely is today, right? The fiat currency system. That its value reflected the public's attitude toward the state. And that given men's failings and thus the state's, the only road a currency can go is down. So there you go. That's what I'm trying to say here. No matter what happens with Brexit, whatever happens, if the UK leaves without a deal, the UK leaves with a deal, if the UK stays in the EU, we're going to continue to see currency debasement, because that's the only way, because countries can default like that through currency debasement, because they've got the power to issue the currency. They've got the monopoly power, and and you might say, well, then they can just keep going, can't they? Well, they can. The only thing is that down the road, you're going to need £100 to do, to buy a few things in the shop. While nowadays you can still do a pretty big shop with £100. Yes, they won't default, but they will create so much credit that the law of supply and demand is going to drag down the value of that currency versus anything that doesn't, anything that isn't created as much as the currency. And of course, precious metals have been a great protection versus national currencies. Why? Well, because there's a limited supply of it. It's hard to get it out of the ground. You can't just print it willy-nilly. And it has stood the test of time as a great store of value for the last few thousand years. So that's what I wanted to say. I'm not concerned about the sharp moves in the price of gold in pounds. I'm going to continue to keep stacking it, as I've said before. So what about the rest of the markets today? What's going on? It's 8:22 a.m. London. So right now we've got spot gold at $14.90. It's up less than $1. Range has been $14.87 to $14.93. So the interesting thing is that gold seems to be holding here just below 1,500 at the moment. So, and we haven't gone below that 1483 and stayed there, right? We've gone below that level, but it seems to always rebound above that level. 1483 that's an important retracement level. From that move, we saw it from 2011 to 2015. It's the 50% retracement level. Silver. Silver yesterday underperformed, which was a bit of a change to the previous days. We did trade below 1730, which is a key level for me right now. I think we went down to 1719, but right now we're up 2 cents at 1741. Range overnight has been 1731 to 1745. Stock markets yesterday didn't really do much. They did finish in the red, but very slightly. Dow, S&P, and NASDAQ. So this morning we have the Dow down about 52 or 0.2%. 26,947. That is the Dow futures, of course. S&P 500 is down just a point at 2989. NASDAQ 100 futures up actually 10 points or 0.13%. Sterling has pared back this morning. We are at 127.83. We're down 0.4%. We did get down to 127.47, and the high has been 128.40. Euro is up slightly versus the dollar, less than 0.1% at 110.81. Dollar is unchanged against the yen, 108.80. And the dollar is also unchanged against the Chinese yuan at 709.85. WTI crude down almost 1%, down almost 50 cents here at 52.96. Brent as well, down just under 1% at 58.75. Bond market. So 10-year yield down 1 basis point, 173.5. 2-year is unchanged at 158. One thing I would say about the yield curve, it has uninverted, the 2s to 10s. Even the 3-month to 10-year has uninverted, and that had been inverted for a long time. And historically, I've looked at some articles recently that yes, the inversion of the yield curve forecasts a coming recession, but then when it uninverts, it means almost always that we are right in the beginning or even already in a recession. So that's one thing to note there about the yield curve. So yeah, Brexit, Trump impeachment, 2020 elections, all the distractions in the EU as well, Syria, Turkey. Yeah, these are big distractions. The thing that I try to keep an eye on is on the debt. And the debt doesn't look like it's going to start dropping anytime soon. What's the only way for the debt to start dropping, to start shrinking? Well, it's for people to retire debt, to pay off debt. And when you do that in a fiat currency system, you destroy the currency, right? You destroy the currency, you get economic contraction. And I'm sure the central bankers and governments don't want that. One thing I will, a little story I will tell you is, not a story, but it's a fact. I, as a student of markets and fiscal policy, monetary policy, I remember back in 2010, I think it was George Osborne's first budget or second budget. I don't remember exactly. He was the Chancellor of the Exchequer in the UK, or the Finance Minister, or equivalent of the Treasury Secretary. And he said, by 2015, we will have eliminated the budget deficit. We're going to have a balanced budget by 2015. So here we are right now, almost 2020, and the budget deficit in the UK is still over 1%. I think it's about 1.5%. And we've had a great economy, right? Low unemployment, as they tell us. Great growth. And now I hear, though, that the projections now is that the deficit will be eliminated by 2024. So what does that mean? Well, that means the longer you keep the deficit running, the more debt you're going to get, because you can only finance deficits by governments, at least, by issuing even more debt to cover that deficit. And the thing we haven't seen yet is an economic slowdown or a recession, which is due any time, I would say, and that would make the fiscal picture even worse for the UK. So hang on to your precious metals if you have any, and if you don't, think about maybe protecting your savings with physical gold and silver. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.